Okay, guys, I think we're live today. So special edition live trading room. We didn't prepare anything. Just we will start to react of what happened yesterday, and market is a bit moving. So I believe it's going to be very interesting. We have a lot of things to say. Will be many opportunities on the market. So thank you for joining us. If you can also confirm that if you heard the microphone, it will be nice. Let's check how many people just joined the session. You can say hi on the chat and say if you see us well as well. I think it's good. I think we are live. Yeah. In any way, we have today with us Michael that joined the team a few days ago. He will can make some short presentation about yourself.
Hey, thanks,
Yeah.
Ruben. How you doing, guys? Super excited to be here. That's my first time, but hopefully in the future we will meet again. I will introduce myself just a little bit. So I've been trading for the last 15 years. Most of my focus is on trading stocks intraday. So basically day trading, buying and selling during the trading hours. But I also trade some commodities, a little bit of options, but definitely my favorite are stocks. I used to trade just a little bit. I had a nice period of time when I traded also Forex, but that was a short time back then. That's it. Let's go.
So you are like the stock master guy. Let's say you are the favorites because we actually very good in Forex, but here we have a guy that understands very well stocks. So that's interesting. Maybe it's a little hint for the future. So.
How many of you have been traded stocks? Let's say, or maybe in the past traded stocks. It's interesting to
be interesting to see. Yeah, if some Forex traders also trade stocks. I know that it's completely different, but when you're a trader, you should know and you should be aware that there is different assets, different market, and everything is correlated, everything is connected, and that's what we will talk today. Let's say the stocks is moving, the stock market is moving well, the Forex with the dollar as well, commodities. So we will move on by starting to talk about what's the effect that's happened actually in Russia. We know that this morning they started to invade Ukraine. First of all, let's pray for people in Ukraine that didn't ask nothing and they are actually in the middle of the war, so it can be very difficult for them. So that's the first thing. And the second thing, of course, as trader, it can give us opportunity, and that's what we will see actually on the market. And the first thing that I want to show is the VIX. That generally I explained many times that the VIX show us an indicator of the fear on the capital market, but also reflect on other type of assets. So we will move on the VIX, and we'll try to think and understand what's happened yesterday and also this morning. So let's move that. All right. So this is the VIX open, 20% gap up. Actually, this is the daily chart. We still see that we are in a very let's say we build
tight range, like consolidating, going to the resistance level.
Yeah, that if you go on the H1 to see what's happened exactly today, but the market opened up. Okay, we see a big gap up, and actually, and I think we also see that on the S&P, on the stock market. Actually, it didn't open, but there is the pre-market. We see that the price starting to consolidate at this type of zone. That is the 37 resistance on the VIX. Okay, so it gives us the fear of the market, and we should look at this. I think all along the day and all along the world that's going to happen. That will happen in Eastern Europe.
So yeah, I will just add just a little bit. So as you know, when the VIX is going higher, the stock market or the indices, the S&P, the NASDAQ, are going down. So if you basically mark your levels on the VIX, and like Ruben just mentioned, the VIX is going to the resistance levels, so that means that sellers will come at the resistance, and basically the S&P or the NASDAQ should find support and go to the opposite direction. So you can use that in order to understand where the market is heading and basically take this into your advantage.
Yeah, Lucian on the chat is telling us that the VIX is 32 right now. It's probably maybe we have some delay on trading view, but yeah.
Maybe go to the future, the VX.
This is the CBOE. Sorry, no, VX futures.
Yeah.
So this one. Okay. No, I think this is approximately the same level. It's the two different things. This is the futures and the CFD. But I was looking just before at the CFD, and it's still in the zone. Like we are still exactly at the resistance we mentioned, 37 actually. So there is small difference between the futures and the CFD. But anyway, we are actually in a very interesting point, interesting decision. If we see that the situation in Ukraine will be worse, so of course we will see a breakout on the upside, and I think the latest point that was very high. It was like around 80 during the coronavirus at the peak, and here it was 28, the crisis. So we are actually in the middle. It's going to be interesting to follow this, and of course if we see a breakout, there will be a lot of trouble in the capital market as well. That's what I think. It's a classic movement, classic behavior of the VIX actually.
If we will see a breakout, we can easily go to exactly where you stand in around the 50, 55, even higher. But let's say the next resistance will be around the 50s, and that means the market will drop down even more, and plenty of opportunity for us to take advantage of.
Let's move on to the dollar index that I believe also is a great indices for us to talk about. As we know, when there is a fear in the market and when some investors want to, let's say, put their investment on a safer asset, they actually switch their investment into the dollar, into the yen, into some commodities as well. And we will talk just after for gold and silver, but if we look at the dollar index, we will also see that there was a big spike. There was a big spike today as people actually invest in a safe asset. So yeah, this is for the morning. We are actually up 1%. That is a very strong move on the dollar index. Actually, we reached to 97. That is again the highest point we had. Let's say few weeks ago, and actually we are actually testing this supply that I believe is also a weekly supply that we see recently. Actually here, so the dollar index is still on the uptrend. We clearly see that the price can still goes up, but still, as you see in the VIX, as you see in the dollar index, we are actually approaching a zone when the price can react. So let's try to be attentive of what's happening. Actually, we are very close of this zone. That might be some reaction exactly at this point, at least.
Yeah.
So that's for the dollar index. And if you see the euro dollar, okay, so that's exactly the same point we see. Okay, it's exactly the bottom here. It's the top we saw last week, let's say 2 weeks ago, and actually we are testing this zone. Okay, so this is a crucial zone for the euro dollar. Again, it's going to be interesting to follow what the price will do here. But actually, we had a big sell-off on these pairs this morning, and people want to invest, let's say, hardly to the dollar. So something to take in consideration.
Yeah, and it's always important to remember what is your trading basically levels or term.
Zone,
Yeah.
Key zone. Actually, for me,
Exactly.
this is a key zone. Like this is an inflection point. So actually, we had a little bounce. So there is some interesting point. Okay, even you believe that there is the fear in the market, and you believe that the dollar will still get stronger. At least there might be some reaction on the market, and as a day trader, you can, let's say,
use that to your advantage, because this is what I've been trying to say. Is basically what I'm trying to say is that you gotta understand what kind of trader are you, right? Are you a long-term trader? Are you a short-term trader? Do you wanna buy and hold or just scalp? And depends on that. Find obviously your style, and depends on that, trade what you see, and look for the right support, resistance levels, supply, demands, etc. Okay, what else do we have?
I think we have the yen as well. That same as the dollar. Okay, people that want to invest in, let's say, even people have cash in the stock market. Okay, they want to withdraw to put it in a safer environment,
Right.
and generally they go to the dollar, as we see, but they go also to the yen. Okay, and if I take the euro yen, for example, that we see actually the same reaction, that actually the euro yen starting to get stronger. So here in these pairs, we see the yen getting stronger with this big drop, but still we are actually in a zone that the market can give a reaction, at least a bounce from here. Actually, I like trading volatility pattern, but I don't feel that the market can like quash more than that today. Like it's already high volatility, so you can find some good spot to enter the market actually here, and it's gonna give you like a great risk reward, for example.
So let's say if you go long here, right? That's what you're thinking of, going long
I
around
think
this area. So what can be the next level? Because sometimes, we always talk about it. What is the target? Where can you take partials off and stuff like that? What will be the next level that you will take some of the position out?
Yeah, that's a nice question. But we have this extreme zone in this type of environment. I will not hire for big target, because we don't know what will happen the next day, and that's why if you want to hold it until the extreme zone, it can be like more dangerous. So I would prefer to exit my position here in the middle of the range. Here the middle of the range is exactly at the middle. Okay, you see that the price have ups and down, and approximately the average price of the euro yen is 130, let's say 90 approximately. So this is a statistical zone, but if we go to lower time frame, we can, let's say, find a supply at least to exit a zone that can be interesting. Let's say I would say that zone that is approximately the middle supply.
Yeah.
So I won't hold it more for longer time if it's old, but you can also like find if you're a scalper and you want like to profit for short short-term movement. So at least you can, I don't know, exit here if you're very afraid. If you're very afraid of holding it for a long time, as we don't know, we can have a news in 10 minutes and the situation
reverse.
Yeah, the situation can be even worse. So that's what I think. But still, we are in a zone that the market will have a reaction, I believe, and it's always interesting to have this kind of movement.
So when you're trading, obviously, make sure you placing your stop loss at the right place, because you can see all the tails bouncing on that level. So make sure you give it enough space, but also on the other side, just make sure you have enough space for the upside to take your partials, and your risk reward is basically the right one for your plan. So cool.
Yeah, totally agree. You have to put the stop loss here, and in this type of high volatility, the stop loss should have space, like you mentioned. It should be at least here, maybe not here, because it can, if you put it very close, like at this point, The market can give like a big push, and, open a spread, take your stop loss, retail stop loss, and then move up again. So you don't want to get trapped here. So try to give some space, and of course, if you give some space to the price, you should allocate the right allocation size. Okay, there is high volatility, so we can expect larger movement. So diminish your lot size and increase your stop loss in this type of situation. And that will be the case for the next weeks for the dollar as well, and for other pairs. We are in a big movement on volatility, actually.
I see you guys writing some questions. It's great. Keep on writing it. And as soon we will finish talking about the rest of the chart, showing you the rest of the charts, we will answer all of your questions.
Yeah, we will answer some questions at the end. So we talk about the VIX. We talk about the dollar, the yen. Let's move on commodities, because we also had a very interesting movement. Let's say expecting movement as well in gold, because even we didn't expect the war. Let's say as a previous commodity trader, I expected the commodity market to have a large extension as we had today, especially in gold, also in oil that touch $100 per barrel.
Exactly. By the way, you told us that it's gonna go to $100.
Yeah, I had a forecast. Let's say here at the office, I said, let's say 5-6 months ago, that when the price of oil was 60, that will reach 100, and not because of the war, because only the demand supply imbalance that we have actually on the oil market. I had some friends that expect oil to reach to 300. I don't know how much realistic it can be. But at least there is also high movement and high opportunity to get there. So
from 0 to 100.
Yeah, that's actually what happened. Yeah, yeah.
Okay, so we're looking at gold weekly chart. Yeah. Okay.
Yeah, it's actually a weekly chart. I think a lot of guys identify this ascending triangle on the weekly chart that actually work out.
Beautiful breakout.
Yeah, beautiful breakout. A lot of pips, and talking about this movement, we had a trader that actually passed the 3 bootcamp challenge.
Yeah.
Traded on a 100K account, and actually take all of these moves here just before the breakout he expected. I think he was long all the way. I believe he already closed his position, and he made a 20K PNL. So wonderful stuff.
In 1 day.
In 1 day, yeah. In 1 day, it was 2 lots in gold. So like you guys, you can find those type of opportunities every day on the market. Here, if you follow also the macro and you understand the gold, let's say the gold imbalance that we have today, and also getting inflation, because we also talked a few months ago that gold will go up because of the inflation that create according to all the QE, the quantitative easing that we had in US. So we believed that gold will still goes up to counter this inflation. But I think that's a nice move. That's a wonderful move here.
Yeah, obviously remember that you see an extended move like this in gold. It doesn't mean that you need to go, right away and buy it. Obviously, especially when you see those types of move.
Volatility. Yeah.
Yeah. So you wait for a pullback, then you see that the support level is holding, and from that point, you look into buy. Try not to buy the breakouts or the high breakouts.
Yeah, definitely. I think that's something I explained yesterday on my trading room. I don't like to be the last guy to buy the gold, actually. I want to prefer that the price, let's say, react to an important key zone to reinforce my buy, but buying here when the price already moved 5% from the bottom here, I believe this is not the right way to do it. Actually, on the weekly chart, of course, on the M30, on the H1, there might be some opportunity to hold, but at least buying here would be very difficult to hold and to make a good risk reward, at least.
Yeah, your stop loss is huge, and Yeah, it's too wide. So a friend of mine told me, I don't want to be the last guy coming to the party, but I don't want to be the first guy coming as well. I want to be somewhere in the middle. Yeah.
Interesting. It might be that here we are in the middle as well. Like we don't know if we are in the middle, but at least way that some people left the party and then you come back. Like I think it's gonna be well as well. I'm trying to read some question that we have. Can we both short and long term at different times? You can. Like if you have a long term portfolio, you can still you can still hold gold in your portfolio. But if you believe that the price will go down on a shorter time frame, so you can also benefit from this. Okay.
Usually you want to hold two separate accounts, and that way it won't mix. That's my opinion, at least, that you have one for long term and one for short term. So for day trading and for a long term, for example.
Yeah, for example, in the equity market, for equity traders, when they hold a long term portfolio on stocks and they believe that they're going to be a good crash, they are actually going to options. They will buy some put, that's something more advanced, but they want to, let's say, hedge their portfolio. So they want to have some protection if the price goes down and also benefit from this drop. Even they will still hold the stock market when the stock will crash. They will find some edge on the option side. They can also sell the futures, but let's say option for this type of hedging would be the most efficient way to do. So that's for gold and silver. If we talk about silver, is approximately the same. We had last week. So this zone was a very strong zone here at the 21 that on the weekly chart we respect multiple time. Of course, for people that bought at that zone here, that's wonderful. Okay, you see on the daily triple bottom breakout above this one. Still, buying here for me will not be like a nice entry. Okay, we are still in the zone. Okay, what do you think about that, Michael?
Yeah, definitely. It was a great double bottom at the low there, and from here it's either waiting for it to break and retest, turning the resistance to support, or actually waiting for maybe a consolidation a little bit above the resistance levels, and from that point maybe try to go long.
Yeah. Even the and also. If I go back about what I said yesterday, that the news will not 100% of the time move the market as you thought. Okay, if you believe, let's say, if there is a news that goes out that says that okay, Russia is invading Ukraine, let's say in a more strongest way. Okay, it didn't mean that the price of gold or silver will like break up like this. Okay, it's generally. There is a nice sentence like buy the rumor, sell the news. Here it can be the way in this situation. Okay, you can have a news and the price goes back to the middle of the range. Okay, so the market already can price what's going to happen exactly in Russia. Okay, maybe the price is here because we expect that the war in Russia will be completely worse than what there is today.
Yes.
Okay.
Let's see, maybe some indices just before we will wrap it up.
Indices for the future.
Again, so when you're trading, try to keep an open mind and try to look at the bigger picture. If you know, remember that if you have more information, it doesn't matter if you're trading it or not, but if you have more information, you can decide more properly on the trade you want to take. So if you're looking at charts like the S&P, the NASDAQ, looking at the VIX, maybe some European indices, many as you get, you basically get a full picture, and that way you can decide if the pair that you're looking at is the right one for you, and so on. Yeah. So try to keep an open mind and always learn and just analyzing more charts, more indices, more markets, basically.
Yeah, definitely agree. You have to find some spot that you should have in your trading plan, that you say to yourself, okay, when it reach here, I should react like this or like this. If the price, you have to have a trading plan that all the time tell you what to do, because if you don't have something like this, you will be completely lost at the beginning. You will not know when to buy, when to sell, what to do, and of course try to have a lot of time in front of graph and chart. Try to backtest as well. Okay, so this type of war, this type of situation already happened in the history, so you can all the time compare about what's happened like 10 years ago in Iraq, also in Crimea, for example, and I will also show a good example of how the market behave when there is a war actually in the world. But yeah, you should all the time be aware of what's happening.
So when you look at it, this chart, for example, of the S&P, that's a weekly, right? So we're looking for a long term here, but you can see the head and shoulder patterns at the top.
We'll just get rid of this option line that's actually broken. So here the structure is break, so we can actually get rid of this.
That was perfect.
Yeah, that was nice. Like this was a nice option line, option move.
Yeah.
But here, yeah, definitely we had the first shoulder here. We had the head. Again, we had the shoulders here, and we break out. Okay, we break out exactly at that point. That was the neckline.
Now, when we want to understand where exactly we're adding, so we can exactly just calculate the
top.
The top to the neckline, and from that point. That's a nice drop, right?
Yeah, that's a nice
Could
drop.
be a nice drop. Obviously, in the middle, you have a lot of support levels. The 4,000 will be a great support if we'll reach that. There's a nice gap over there. And yeah,
I think my target for the S&P
3,800 looks pretty good.
Yeah. I think 4,000 for me. Also like my prediction. Oil was 100, for S&P it was 4,000.
Yeah.
Of course we can break below, but I believe when we will reach 4,000, I believe then some people will start to again come back again at a better price. Even there is a war and the stock market goes down, try to remember that here when the price stopped, it stopped at 4,700 approximately.
Mm-hmm.
There wasn't a war in Ukraine. Like here it was. The stock market is completely overvalued, so
inflation coming in and stuff like that.
Yeah, so the war actually is enhancing what we had in the inflation, like let's say a few weeks ago.
Yeah.
So that's why we see like a big breakout. Like we have like a war coming after the inflation and after the COVID. So the stock market is like completely down here.
Just the excuse to drop the market just a little bit more in order to buy in a lower price.
Yeah, that's what I'm looking for personally. I like few months ago, even just after the COVID, I wanted to invest, but the market like went up like so fast that I couldn't even enter, and I'm starting to find the bottom to have a long-term portfolio, but that's still my personal view here. I don't like to sell like indices. Maybe you.
Yeah, I was short. I shorted the Qs. That's the ETF for the NASDAQ, but I got out just a little bit before that drop. Yeah, but I made a nice move anyway.
Yeah, from here maybe. We have Seti that asking if it will be possible to trade indices on Fivers. You wanna answer?
We are working on it.
Yeah,
so we are working on it.
We hope in the near future. We don't have an exact date, but yeah, that's what Michael is here.
we will do stuff together, more stuff together, guys. So we can look also at the NASDAQ if we're already in
Yeah.
the indices, and then we will wrap it up. NQ. So you can see that the
I'll put a daily chart maybe.
so you can see that the NASDAQ is a bit more aggressive than the S&P. That's because of the all the pump that was on in the the technology stocks. They all went up like crazy, thousands of percentage during the corona. So now that the market is dropping, the NASDAQ is dropping much
more than the S&P.
Yeah.
There was, I think, a divergence between the S&P and between the technology sectors, actually. So,
yeah, exactly. So in my opinion, if you want to understand just a little bit more the US market, keep an eye just a little bit more on the S&P comparing to the NASDAQ comparing to the S&P, just because it's more aggressive. Obviously mark the levels as you can see. There's the 13,000 that we are reaching right now, and later on the 12,500 or the 12,300. So those are the levels that I see. Usually that they will go together with the S&P. So let's say the S&P will reach 4,000 and the NASDAQ will reach 12,500. And then you will see the VIX in a resistance level, and they will go the opposite direction.
I think the 2,500 here might be a nice target for example.
You want to show some the war?
I will show this, but maybe you can interact with us. What do you think when you have like a situation like this? Okay, what do you want to do in the market? You prefer to go with the fear actually that the market is showing us, or do you want to wait a good spot actually to make a buy, to believe that the economy will be better maybe after? Maybe you believe that the index is already priced the war, okay, with this drop. Maybe the war is not like so worse than we think.
That's a great question. In my opinion, what I'm looking for is basically in this situation when we already have a major drop, then I'm looking for a retest to the next resistance level, let's say 14,000, yeah. So if it will go up to the 14,000, around this resistance level.
Small issue with the camera, so just 1 minute. It's like heated a bit.
Heated?
Yeah. But we'll come back in the camera in a few minutes. But
so as I was saying regarding the NASDAQ, in order to go short again, I would look for a pullback, a nice pullback to the, let's say, 14,000. And from that point, look to the downside again. The other option, if you feel like you missed the downtrend, just wait for the support levels around the 12,500, and from that point, look for the upside. Again, like always, this is why I said that you want to see the big picture, because if I know that the S&P and the NASDAQ are in support level, and the VIX reaching a resistance level, that way I'm getting basically the full picture, and I can understand that the trade that I'm about to take have more potential of winning than losing. And then risk reward, trading plan, and all of that. Oh.
Yeah, we are actually inverted. Okay. Well, welcome again. It can happen.
Yeah.
All right. I don't know. I know that actually that some retail trader would like to come in the market and to sell here. There is a war. There is something happening. I want to win. And generally, when people sell, when everyone already sold, like with the example, if you party with the party guy that came in the middle.
It's like buying the gold right now, right? You wouldn't go and buy gold when it's already extended like this. So that's name on NASDAQ and the S&P. You want to see a retest, a pullback, and only then look for the downside again, or just wait for the support level in order to bounce from there.
Yeah, the only way to hold gold, or let's say if you take the NASDAQ here, if you sell, okay, exactly at that point. So of course you will hold, like there is no questions. But selling when the price already touch, I don't know, it's like 10, 15, 20% down here, approximately. It's very complicated. And if we want to go back and check in the history what happened for this type of war, I think you will be a bit shocked. Okay. Okay. So you see here. Okay. Never mind. Okay. So this is this picture, and this is for me very interesting. And I remember that when there was a war actually in the capital market, maybe there was some date like here in 64, 91. I wasn't born. Okay. But still. Only 21 when in Afghanistan there was a big push, and then we got back for the Crimean crisis, for the Iraq war. That was also a big energy crisis here. The price dropped, okay, at the news, and then okay you see that it gave an opportunity for a lot of people here to buy stocks at a better price, to get in the market at a better price also. So
remember that this is how the market works. I mean, any kind of market, when you have two participants, one buying and one selling, you will always have this movement of going higher prices. Then something bad happened. It dropped the price. It's a good price to buy because it's lower than the previous one, and then people are buying it. It's always supply and demand.
Yeah, definitely.
Right.
Yeah, I think we won't talk about crypto, but I still think that it can be a good edge. Even actually, the crypto is very correlated to what's happening in the stock market. I still believe that it can be a hedge. There is a lot of hedge fund that actually entering this new market because technology might be the future. Okay, we know with the metaverse and all the NFT and all those new things. Right. Even I don't know, and I don't invest in NFT personally. I don't know, but I know that technology might be the future, and investing in stocks for people might be like, oh, stocks we already hit it like for 50 years, 60 years, and you want something new, something different that can give maybe more. So that for crypto, of course, not for day trading, for long-term analysis. That's something different. Roshan is asking that we should, he's telling us that we should maybe make more analysis on indices on trading room. Of course, actually the indices moved very well because what's happening in Eastern Europe is affecting the stock market. But yes, like we said, and like Michael said, that there might be in the futures that we will have indices. So that's something we want to do, and of course we will go in indices way more in the future. That's something that we should do, of course.
Yeah, definitely. Right, guys. So if you have any more questions, feel free.
Yeah, feel free to ask any question. Just want to give you a reminder. We have in 20 minutes Gary Dayton that's going to start, that actually will start his second course talking about psychology, trading mindfully. I think it's gonna help a lot of traders, especially in this type of situation when you don't know what to do because the market is dropping and you don't know if you have to sell, if you have to buy.
You don't want to miss the chance because it's already dropping and maybe it will go up. So yeah, a lot of psychology here.
I think so. Yeah, I think attending this type of session for our traders, because this session are only for traders that participate in our programs at the Favors. It's going to be a very nice session that can give you a lot of help and advices for trading actually.
Cool. All right, guys. So
you have last question maybe on the chat. I know that maybe we can.
Let's see if we missed something.
The safe even status of dollar and economic situation. I think we already answered that. All right. I think we finished. But again, if you have any more questions, we will come back Monday for a weekly forecast.
Good.
Basic trading room. I think that generally Yaniv is doing this.
Yeah.
And it will be nice to see. I think each day will be a very long day until Monday. So
yeah,
there might be a lot of things happening.
Weekend gonna be long. Yeah.
Okay.
Okay, guys. Thank you very much for participating.
Yeah, thank you very much for being with us. This was a special edition. I hope you enjoy the content, and see you in 20 minutes with Gary for the guys that waiting for this. Again, good luck in the market, and see you next week for live trading room. Goodbye, guys. Thank you.
Bye. Take care.